Flip the page, it's time to start the game. Graham and Nathan calling out the names. Opportunities knocking loud and clear. The market's playbook is finally here. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with a hawk's eye. Options and plays in a live display. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with a hawk's eye. Options and plays in a live display. Every move counts in the game they play. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, step by step they break it down. No confusion, no spinning around. With every trade they set the tone, making big calls on their trading throne. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, this is where the big plays are made. Oh. Opening playbook, we're ready to roll. Daily moves that will fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh.
Good morning, everyone. Welcome to the opening playbook for Wednesday, September 24th. Happy Home Day.
Hello. Good morning, Dave.
Good morning, Nathan.
Pyatt, Gail, Joseph, how are you guys? Don G, Jade, hello. We've got Windwalker in the room. St. Louis, Carl. How is everyone doing? Susan, Gina, Tim, how are you guys? All right.
So I saw you made a little bit of an announcement yesterday at the end of the day there.
Hey, Brandon, Lynette, Andy. Yes. Pretty excited about finally, I think, getting over the hump here. I have to say I think because like I keep telling people, troubleshooting some of this stuff has been so much more than I ever imagined. In fact, just now, I just sent them another message saying there's something wonky in the SPX spreads. I don't know what it is. Maybe someone in the chat can tell me why SPX data is so quirky. Because I've been doing this for a long time, and I've never seen something quite as clunky as the way SPX data comes in trying to map out spreads. So I don't know. Hey, Jesse, Mike, Scampy, another Mike, lots of Mikes. Lynn, hello. Papa, Jay, Tim, Robert, Lester, Doug. Wow, got some first timers in there. Hey, Des. Hey, Wendy, Joseph, Andy. Great to see you. Love to have some first timers in the room. Hi, Joshua. Jim K. Yeah, you're right, Des. I mean, Interactive Brokers certainly is, and it seems like Thinkorswim is as well. But we're getting the data directly, from Polygon, which is a CBOE based feed. So you would think it would be more robust than that. But I think I guess because of the volume and some of the hole, sometimes there's volume holes, right? So you have like 2 strikes that have lots of volume, and then 2 other strikes that don't have a lot of volume, and so you get some wonkiness there. So trying to work that out. Hey, Patrick. Hey, Hank, Omar, Ted, Ken, Rolly, Dave, Gwen. Great to see everyone this morning. So, well, if it is your first time here this morning, you're going to get a little bit of a unique first time because typically this session is Graham and I, not to disparage Dave, but he's not usually the guy who's talking with me first thing. Usually it's Graham and I and going through our typical stuff. Today's going to be a little bit different. We have Silas coming on because we've talked a lot about the insider stuff over the last week. And I've given him a chance to show us software a bit here, but I haven't really given him the time to break down the training side of it, to really walk you through how all of this works, why he's a big believer in the insider stuff and all of that. So this will be a little bit of a different scenario there. Johnny, Patrick, David, Sharita, Rand, Danny, Jim. Jim, I will not be wearing a duck shirt, and I resent that comment completely. How dare you? Mike, Stu.
That is offensive. Yeah.
I'm actually wearing Penn State all week, Monday through Friday, in honor and preparation for the whiteout game. So it's like a build up to the game on Saturday. All right. Well, I think Silas will be on here in a minute. I think he's in there in the waiting room now. Before Silas jumps in, like I said, we're going to focus a lot on the insider training. Give Silas the floor to kind of walk through that, why it works, how it works, maybe some misnomers that you guys might be aware of generally, but Silas is going to dive a little deeper. Before we get into that, I want to mention, guys, CLSK up about 6% again today. So now's probably a good time to be taking some profits if you're in the CLSK position. Give me a quick yes in the chat if you are in CLSK, either on my trade or Graham's trade. We accidentally both traded CLS, not realizing it. So if you're in either one of those trades, maybe start taking some profit there. We are not quite, let me just look at it real quick here. We are not quite to that $15 level, but we are right on the doorstep. We might even, we did touch it. We actually touched it early this morning at the open, which was kind of the intermediate target. Now, I have a $12, $13 call, so I'm kind of safely in the money there. But of course, I gave it way too much time. I gave it, an extra month that I didn't need, or else this could have been about 400% instead of the 170% that we're at right now. Also, we've got Fortinet. Okay, so Fortinet's, just kind of slowly grinding. It's up a whopping 0.2% right now, but we've got a longer term trade on that. We also have that Micron trade. That one's trading right into the teeth of earnings with Micron. But the one I did there, folks, I did a 145, 150 call. So let me show you the idea here on Micron, because I mentioned it yesterday, but it was during, we were kind of bouncing back and forth. Let me actually walk you through what this trade looks like on Micron. Joseph, I think you could take some profits now, depending on how many contracts you have. You don't want to let something that's up 160% turn into a loser, obviously. But so just kind of depends on how many contracts you have open on there. But I think totally valid to start taking some profits. So here's Micron, folks. This is the monthly chart. Really beautiful looking monthly chart. Actually, if you go all the way back over the last decade, really a great stock. But we've got earnings coming up on Micron. Now, a lot of people avoid trading earnings entirely. So here it is. Q3 sales at 11.3 billion, up 46%. 303 a share. Revenue projected at 12.5 billion. Got some price targets raised, so on and so forth. And for the most part, Micron did a whole lot of nothing, right? It's down 2.7%. really not a big move on Micron, from an earnings standpoint. Now, the trade that I have is, let me pull it up here real quick, just to make sure, 145, 150. Okay, so I have a line in the sand here at 150, right around there. Now, the beautiful thing about this trade is that I went ahead and I traded right into the teeth of earnings here because the volatility gave me a bigger cushion on this trade, right? So by trading this yesterday, I was able to get this big fat cushion and still put myself in position to make about a 35% ROI on Micron. Now, these are some of my favorite trades, guys. Why? Well, because there's so many different scenarios here where I can get a winning trade out of Micron, right? Like if you look, I don't think I can use my marker on here because the way the screen share works. Maybe I can use a drawing tool. Let's see. Is there one I can use? Maybe I can use a drawing tool. There we go. So with Micron, we can see it do nothing, kind of like it looks like it's going to do now on earnings. We could see it beat earnings. We could see it take a decent hit. We could even see it take a massive hit and then just bounce back. And all of these different scenarios are going to be wins for me. The only scenario that's going to be a loss is if it gets tanked on earnings and then stays below 150 and doesn't bounce, which you guys know on earnings, even if you do get worst case scenario, still about 50% of the time, it's going to bounce back up and center out and finish above here. So there's so many different scenarios. So I don't know about you guys. You can let me know in the chat here. Once again, you guys know I always like to use the chat. For those of you who are new, by the way, we've got a whole bunch of people who are new on Opening Playbook. I'm one of those people who need affirmation. I need you to let me know in the chat if you're following along. But let me know in the chat, do you think all of these situations have more than like a 65% chance probability of ending up above 150? Remember, from the close there, that was about a $16 cushion on Micron, right? So that's like, a 12% cushion? Dave, is my math right there? $166 down to 150, $16. What's that, like a 11% cushion, maybe?
Yeah, about a little over 10.
Okay, a little over 10. So with 10% of room on a good stock, do you think you're going to win more than, let's say 60% of the time? I would say more like 80% of the time. Yes. Well, that's the beauty of actually trading right into the teeth of earnings on a defensive trade. See, most people try to trade very aggressively on earnings, and I do sometimes as well, by the way. But a lot of times using earnings as a defensive trading and capturing some of that extra volatility to give you a big cushion can be one of the best plays. For example, I can show you exactly how that plays out by showing you that my Micron trade is now up over 10% while the stock is down 2.2% on the day. What does that tell you? The stock's down 2.2% and my trade, which is bullish, is somehow up 10%. Well, it shows you that I'm getting paid for that volatility underperforming with the expected move. You guys could still trade the Micron trade. You're just going to lose a chunk of the profitability because by trading it before earnings, we were getting paid for that extra volatility. So this was a trade where yesterday, using that extra cushion, you're basically trading. You're basically trading a volatility crush, but in a defensive trade versus kind of like a straddle trade where you still needed to move up a little bit or break even. Here, it can actually go down 10%, and you're still going to be able to grab it. So, Ralph, I don't know if it's still valid today. This one I got flagged yesterday toward the end of the day. So I just wanted to walk you through that. I got some questions yesterday about why would you trade into earnings? Well, the reason I would do it is when I think the odds are so good that even going into earnings, you have enough probability to end up. So here are my rules of thumb. Let me just type them into chat. If you want to take these kind of income trades into earnings, 1, trade outside the expected move. 2, trade good stocks. 3, ROI of 30% plus. So those are really my 3 rules, guys, if you're going to trade these defensive trades into earnings, just to make sure you're getting enough bang for your buck. You're in a situation where the probabilities still are aggressively in your favor, which you can do by simply trading outside the expected move. That means even if you get a negative beat right at the expected move, you're actually still in a winning position. And then, just make sure that it's a good stock, right? Make sure you're not taking a crap stock that you're gambling on and then trying to put like a high probability defensive trade on a stock that has no reason to expect that a defensive trade should work out. All right, one more thing, and then I will pull Silas up onto the board here. Is that, well, actually 2 more things. Number 1, we got filled on our overnight option today. So went for a little bit higher target because the fills are a little bit higher with the VIX being low. If you guys have no idea what that means, don't worry. We'll cover it some other time on an overnight option session. But for those of you who do know what I mean, paid a little bit more, got filled a little bit more at the top end there. So good job, all of you guys, bouncing back. We took our first loss in a couple of weeks yesterday, but nice to see a good bounce back there. So I think 14 for 15 or whatever we are for the last 4 weeks. But the thing that I wanted to mention to you guys, we have a TSLA, that's Tesla opportunity here for a 2-way trade. We are right at that 440 level. Well, we're about $3 short of that 440 level. I think this is a great time to do a 2-way trade. And so if you want to do that, you can play it all the way down to like that 400. It's actually like 396 is the gap fill there. Or what you could do on the flip side is you can trade it up to the 488 high. That's like a $40 move on either side. And the cool thing about Tesla is that making that $40 move is not a whole lot to ask. I mean, Tesla's up $11 today. So asking it to make a $40 move is actually not that far outside the equation, but you can give it plenty of time to make that move right now. So let me go ahead and flip over to the Tesla chart. How do I delete my stuff here? Well, I don't know. Maybe if I change charts, it'll go away.
There's a trash can at the bottom left.
Oh, look at that. All right. Thank you, Dave. So this is Tesla. Let me go to the weekly chart. Here's that 440 gap. So what we would do here, folks, is we would draw basically a rectangle around that 400 to 480. So coordinates 380, 400. Sorry. 440. There we go. Oh, wait, I did that wrong. Wait, what am I doing? 400, 480. Wow. Nate, get it together. 400, 400, 480.
Yeah.
There we go. Wow. Sorry, guys. Struggle busting this morning. So this is the box. Now, this is a fairly big box, but if you look, anytime that Tesla gets on a momentum run, it's typically either going to continue or it's going to move back. Not that complicated of analysis, right? Not exactly the most genius thing anyone's ever said about the markets, that, hey, it might either continue or it might stop and go the other way. But Tesla in particular has the ability to move in both directions with momentum. So you can give this trade plenty of time and still make a decent ROI on it. We call that a 2-way trade. Now, if you're brand new here, this is going to be a more complicated trade. We're putting 4 legs on 2 different debit spreads. So if you're brand new, I would not recommend taking this trade, but I would recommend noting what we're doing here and kind of adding it to the fire hydrant of things that you want to learn to take advantage of the market, because I think it is one of the most kind of underplayed ways that you can trade the market, is simply saying, listen, I don't have a big prediction for Tesla. I don't necessarily have high conviction that it's going to go up or that it's going to go down, but I do think that we're going to get a decent move here. And so I can do that by trading in either direction and giving it the time to make that move. So let me show you by switching over to my Thinkorswim chart here what this will actually look like from a trade standpoint. Let me get rid of this guy.
Out? How far out are you going?
Oh, no, we're going to give this sucker some time because this is a $40 move. It's about a 10% move on Tesla, which, to be clear, Tesla can't cover in a day. But we're not going to box it in and say that it has to cover. So I'm going to give this actually a full 30 days. This will be the October 24th. We're going to give it a full month and say, is Tesla either going to go kind of back and fill that gap over the next 30 days, or are we actually going to see it rip all the way near those 488 highs? So all we do is we put the bullish spread here at that 475, 480 level. You can see that's about $1.35. Okay, so we're getting plenty of room. And then we're going to go down here on this 405, 400, and we're going to buy that one too. Now, what you'll see is that the price to combine these is about $3, but the max value of this trade is $5. So that means we can make a 40% ROI here, or sorry, a 66% ROI here on a trade without even picking a direction. And I think this is where most people have no idea that you can even do this in the stock market, because they would do it with like a straddle or a strangle, which is very expensive. You have to get the move right. It has to move quick enough. It has to overcome the implied volatility, all that sort of stuff. Here, with a debit spread on either side, you can really rake in those scenarios. All it has to do is get 1 penny above 480 or 1 penny below 400, and you're going to make a 66% ROI if you can get in for $3. Now, full transparency, guys, I'm not actually going to put on this trade. I already have 2 Tesla box trades open right now. I'm not going to stack another one. But the reason that I thought about it is because I just saw how quickly mine is moving right now. And I thought, let me give you guys one too, if you're not already in a Tesla. Now, some of you guys might already be in one that we did, because I think we did one last week. But if you're not, I just think this is kind of a no-brainer trade where you can give it 30 days and still have it make, what for Tesla is not really that big of a move, 10% or so in 30 days. So let me go ahead and type this one into the chat for you guys if you want to take advantage of it. This is a more complicated trade. This is 4 legs. If you're new to trading, you probably don't want to take this one, or maybe you want to take it in a paper trading account. But I think it's worth noting. A lot of times, guys, I will give you trades in here less to say, hey, this is a super high conviction trade, and more just to show you structures that work that most people don't know about. So this definitely falls in that category. For those of you asking if this is an iron condor, a little bit of a nuanced answer here. Many brokers will just call this an iron condor. On Thinkorswim, it does call it an iron condor. In reality, technically speaking, it should probably be called a reverse iron condor. The reason is because you're not actually trading it to stay inside the box. You are trading this to move outside the box. And so in reality, it should really be called a reverse iron condor. And like some brokers, like Fidelity, won't even let you put it in as an iron condor for that reason. So it just kind of depends on your brokerage and what terms they use. Sorry to give you a little bit of a nuanced answer there, but I want to just make sure everyone's on the same page.
Yeah. Tasty does it as a reversed also.
Okay, thank you for that. Debit $2.99, let's call it.
Ted, I can answer for Nate. He never legs out of a two-way trade, or almost never, but Graham does frequently. So there are a couple different ways you can play those.
Sorry, guys. I'm just also putting this in the trade sheet for those of you who are VIP members, just so it's in your trade sheet there. And bada bing, bada boom. All right. That should now be loaded up. Folks, the next question I always get is, should we use a target on this? I'm not a big fan of putting a target on these ones that are 30 days out ahead of time. I really prefer just kind of seeing what happens with the market. And the reason for that is because I kind of want to see how time and ROI react. So what I mean by that is I'm happy to hold this trade for 30 days to make a 66% ROI. But if Tesla jumps 6% tomorrow and the trade's up 25%, I'll just take it. Even though I was planning on making the 66% ROI, if it's up 25% tomorrow, I'll just take the profit. And the only way to do that is discretionary. Look at the time, say, hey, you know what? If I was willing to hold it for 30 days to make 60%, if I can make 25% in one day, that's a pretty good, ratio of time to ROI. So that's my approach there. You can set a target. If you want to set a target, maybe set around 450, 460, somewhere near the higher end of the value of it. For me, I like to use time against ROI to manage these trades when they have a little bit more time and are discretionary. You close it just as a credit. So you open it as a debit, you pay $2.99, you close it as a credit. For anything more than $2.99 is going to be a profit. All right. And if you pay $2.99, that's your risk. So $299 a contract is going to be your risk on the trade. All right. Hey, Silas, sorry. I always say I'm going to take 5 minutes and then 20 minutes go by and I'm adding you on. So apologies for cutting in your time. How you doing, man?
Good, man. Good. Great information. Keep going.
Well, Silas, I think, you probably are going to take a very different route than I've taken today, because my route is, hey, no bias, no idea what's going to happen here, just totally trade structure dependent. You're going to take us down the road of, hey, we do have a bias. We feel very good about our bias because of things that are going on behind the scenes. So I gave people a little bit of a heads up on this. By the way, everyone give Silas a welcome to the chat. Silas, thanks again for being on here. So I've given Silas the floor here, maybe twice over the last week to go through this presentation. We streamed a recording of it earlier in the week. But what we haven't done yet, Silas, is really break down kind of the educational aspect behind the scenes of why you started down this road, what people can learn about insiders, whether they become a member of your service or not, some things they can take away, what Form 4s actually are, some more of the fundamental training behind that. So I thought, let me carve out some time today. Obviously, for those of you interested in Silas' software, which I highly recommend because it's a beast, we'll still cover that. Okay, so we'll still walk through that and go through that a little bit later today. But let's maybe take a step back, if you're good with that, and just kind of walk through what are we actually doing here, Silas? What is insider buying? Why does it matter? What's going on behind the scenes? What is a Form 4? How do you look at them? And then kind of ease our way into ultimately what I think people will agree is probably about as good of a basis as you can get for believing that someone knows something about a stock with a bias that you don't know. I don't really trade that way. That's one of the reasons that when we first talked, I was super excited to have you on, because if you just said all the same things that I say, wouldn't be super valuable for our members, I think. And so, let me just hand the floor over to you. Kind of walk us through why this is impactful. And guys, you can take notes on this, but I think we can also probably get the slideshow from Silas later and put it in the opening Playbook VIP membership area for those of you as well, if that's okay with Silas.
Yeah, absolutely. So first I want to say thanks for having me on. I know these sessions are very valuable. Hopefully you guys are soaking this in from Nathan. I guess the big question is, next time if I'm invited back, do I need to wear my team sweatshirt or team hoodie?
Well, only if Penn State has a whiteout game that Saturday, then it's required to show allegiance to be welcomed on my show. Now, if it's your show, then are you? I assume you're an SEC guy.
You're going to see some crimson. Yeah, you're going to see some crimson.
Okay, well, that's maybe the worst of the bunch.
I may get booted off here immediately.
Although I will say, Silas, I don't know that carries as much weight as it did just a couple years ago.
Oh man.
Before it'd be like, okay, we bow, we respect.
I teed you up.
You're the top dog. Now it's just kind of like, okay, whatever.
I guess we'll have to settle for 10-2 or something. I don't know. I'm going to shut up.
No.
Nathan has proven, particularly with Graham's help, that win rate isn't everything. So.
Exactly.
That's true.
There you go. You are always welcome to represent. We respect the competitive nature around these parts. So anytime.
Cool. Yeah. Well, again, thanks to David, Nathan, and Graham, and everybody for having me on. I want to say thanks to everybody in here too. If I'm looking up, you see me looking up, I'm not distracted. I've got the chat on another screen, so I'm just trying to multitask here. I got all kinds of screens. So if I can at least get my slides to show, we're in good shape. Yeah, I do want to just quickly cover though. Thanks, Nathan, for kind of helping me out there with the intro. And maybe you have seen what I've been doing over the last couple of days or so. I see some people that are part of the program and loving the software. That's amazing. And we're going to cover that as well. But as Nathan said, I do want to spend just a few moments here talking about, why insiders matter. Do they really know stuff that you don't? We'll kind of lightly cover how to search Form 4s. And believe me, you'll see the high-level overview, and you're going to realize quickly that that's not something you want to be doing. And I'll show you a kind of a cheat code on how to avoid doing that. I'll tell you, who these insiders are, what they're telling us, what they don't tell us, and then we'll look a little bit. Hopefully, we'll have some time about the qualification process, because as you'll see, that there are a lot of insider transactions, and then the $64,000 question is, okay, great. Well, which ones do we step in with risk capital, and which ones can we maybe step aside from? And then if you stick around even further throughout the demonstration, I'll share with you a couple tickers that I'm looking at right now, if that's okay with everybody.
Love it.
I
So
think it'll be fine.
what I'm going to do here is, again, we'll try and see if we can navigate this slide here. All right, can you guys see the risk disclaimer?
Yep.
All right, so it goes without saying, guys, there is risk involved in trading stocks, options, futures, currencies, crypto, tulips, tea leaves, whatever it is you're doing. We know trade is risky. There's absolutely no guarantee. Past performance is indicative of future results. Always consult your tax or financial advisor before applying real risk capital in the markets. Okay, so nobody can guarantee any profits or results in the market. This is education and information. So with that being understood, what I do want to do, again, is just spend some time giving you a little bit of information. Probably know what this insider concept is about, but I don't want to assume that you do. So we're going to spend a little bit of time just kind of, going through the lay of the land, if you will, and try and get you to understand why it is important and why we put so much emphasis and focus on it. It's not the only trading strategy that we have in our back pocket, but it's about using data, using this, what we call an information advantage, to give us an edge in the markets. Okay, so just to give you a little bit of info, the former Speaker of the House, you may know her name, we call her Prophet Pelosi, political Prophet Pelosi. These were transactions that she made while she was in office, okay? And I think that the volumes here speak volumes. If you look at these transactions, these options plays, Google, Salesforce, Micron, LBRX, Disney, and these are some pretty substantial numbers and conviction, okay? And then it's not just the Speaker of the House. You've got other representatives here purchasing the stock after the CARES Act, rallying 124%, Amazon rallying 85%, Boeing rallying 110%, Love rallying 103%. And these type of transactions happen literally on a daily basis, okay? And then you've got MTG, another example of using privileged insider information to profit. It's not, it's not a subject that we take lightly here, but she comes in, one day before the invasion of Ukraine and snaps up multiple energy stocks. And this is just an example here on Chevron. And we're not just talking about one, two, just a small handful of politicians. This is what we call Ron the Stockwell Wyden. He's one of the most active traders, one of the most active traders in Congress, sits on the finance, budget, intelligence committees, among other. All of his hard work, bless his heart, led his wife to start purchasing between $245,000 and $600,000 worth of stock in NVIDIA. Okay. Also, this is the wife. Her chip dealing doesn't end with NVIDIA. She starts purchasing between $30,000 and $120,000 worth of shares in Applied Materials, KLA Corporation. These are semiconductor manufacturers. Broadcom, $45,000 to $165,000 worth of shares in additional semiconductor stocks. And to me, I don't care what you think. This is just fascinating information to me. Maybe it makes you mad, pisses you off, whatever. I don't really care. I see this, and if this data is made available to me, if I knew or had this data available, I want to use it, right? I want to piggyback off it. And, we're going to continue to see this, whether it's through politicians, corporate insiders, hedge funds, and the retail trader. We're all retail traders here. there's a lot of disadvantages working against you. You know, we spend a lot of time, or I spend a lot of my time and focus discussing institutional traders, banks, funds. That's kind of my background. I have background on the institutional side as well as the retail side. But what we want to be able to use and take this data, this information advantage, this edge, is start applying it to work for us and not against us. You know, instead of sitting back, being negative or pessimistic about it, like, let's use this data to our advantage. And so I've shown you some case studies here, but, you know, a lot of us here, I'm going to assume that, you know, you're not a C-level executive privy to company financials. You're probably not an elected member of Congress with sensitive public information. And you're probably not a hedge fund executive with millions or billions of capital to deploy. And maybe you are. And if you are, then that's great. So while the average retail trader, you know, is at this disadvantage, maybe struggling, losing, trying to find direction in the markets, you know, insider trading and the insider reality looks a little bit different, a little bit rosier, you know. And the way I look at it is that,
let me stop you, Silas, for 1 second. I'm just curious in the chat here, because I have actually heard people say, like, listen, it's just because, you know, they're good traders. Is anyone in the chat here think that this might have something to do with them knowing information that you don't know? Like, I'm just curious here. Is anyone optimistic enough to think, like, hey, no, you know, Marjorie Greene, Pelosi, her husband, they're just good investors. They just, you know, that's just all they do, and has nothing to do with the fact that they might have some information? Or does everyone assume, like I do, that scarce information, known information, is very, very valuable when it comes to the stock market? I'm just curious.
Choose wisely.
Yeah. Well,
you know it, 110%, right?
Yeah.
Yeah. Okay. Well, I think the chat agrees.
All right, cool.
I don't know, Des, but I'm going to go ahead and say the little bit was semi-sarcastic. Like, it's more that it's just a little bit inside information.
Just a little bit. They're the best. You know, I want to subscribe to their stock picking service. You know,
right.
But the thing is, we don't have to. You know, we don't have to. And if you stick around, I'm going to show you something really special here. But, you know, this is something I also want to ask you guys. We're having fun. I like the interaction here. But let me ask you this one. Do you think that politicians are looking at support and resistance levels? Anybody?
That's a good one. I like that.
What about the CFO? Is he sitting in his corner office looking for a MACD crossover? Stochastics overbought or oversold? And then is a hedge fund manager, are they waiting for a bullish candlestick reversal or a hanging Marazabu three dark bird overshadows?
They're waiting for the full moon trade.
The full moon. So, yeah, I mean, we're having fun here. So let's talk about this insider trading concept. You know, I think it's fairly black and white, but before we get into what all this is, how it's done, how can we benefit, let's talk about, what is insider buying and selling. So we know that this occurs when someone is considered to be an insider of a company, executive, manager, beneficiary who owns more than 10% of a stock. And so usually this can be a good indicator of whether a company will enter a bullish or bearish trend, since insiders obviously have a very strong understanding of a company's position and outlook in the market. It's also an employee with knowledge of important company activity, buying, selling stock of their own company, and it's reported publicly. They have to report publicly to maintain transparency in the markets. And these insider buying and selling, it goes on. Again, they're based on publicly available information, and it's 100% legal as long as it is reported to the SEC. So executives may buy stock when they feel the public has undervalued the company, sell stock when they expect a future decline in prices. And we'll talk about why insiders do buy and do sell. So why buy? Could be a myriad of reasons here: positive financials, Maybe it's a potential merger, acquisition. Maybe it's a change in leadership, or because you have inside information. You have inside information. And we kind of talk about that so much, is that why do insiders buy? I like these little pop quizzes here. Why do insiders buy? I need to see some answers here. Why do you think they buy?
I think they just, want to donate to a good cause, help their employees. Because
they think the stock is going to go higher. Nobody goes in and buys the stock because they think it's going to go lower. Okay, so this example here, insiders buying $25 million worth of stock because somebody or someone or some people's inside the company had insider information, 385% rise. Again, somebody, i.e. company insiders, having insider information. Look at where they're buying, okay? Now, on the other end, why do company insiders sell? Might be negative financials, potential merger acquisitions, change in leadership. You see a kind of the same theme, or because you have insider information. Now, an executive might sell their shares after learning about upcoming poor earnings, thus evading a financial setback. And if you are insider trading, illegal insider information, if you're doing that before it's announced to the public, okay? And here we have the chief financial officer, somebody that knows a little bit about the books, CFO coming in and selling, probably a smart fella. And if they're doing their job, knows the books, knows the financials, liquidates, and the stock drops nearly 30%. Now, a common misconception is that all insider trading is illegal. And that's not true. The only certain types of insider trading is illegal. And what determines whether insider trading is illegal or not is whether that insider is what's called material non-public information to make that trade. Okay, material non-public information. This is any information that's inaccessible to the public that can reasonably be expected to affect the price of a company stock. So it could be anything from, say, a pending lawsuit, revision of earnings, product announcements. As long as company insiders have information and the public doesn't, that's considered material. A couple of days later, after the information is made public, say through a press release or something like that, the information is no longer considered material non-public. And so what we do is we focus on legal insider trading. So many insiders want to own or buy shares of their company. You suppose a CEO believes in the long-term prospects of the company. You invest in it and reap the fruits of your labor over the years. Can you do that legally? Sure you can. And many companies encourage ownership by officers, employees, directors, but it cannot be based on material or non-public information. So there's also other players that we've alluded to, certain insiders that blur the lines a bit. So let's dive into that. Let's talk about who this collective group of insiders are, because I don't want you just to have information. Hey, we're going to buy XYZ stock. I want you to understand the reasoning behind it and why we do pay attention. Okay, so there's three core groups of insiders that we follow. And so this key insider group number one is, well, let me ask you, who is most likely to be privy to key insider information? We've kind of talked about it, right? Information like data, company financials, product development, maybe possible earnings related data. Anybody want to take a guess? Yeah, corporate insiders. You got it, Megabucks. I like the handle. Corporate insiders, CEOs, okay? C-level execs. So we call them corporate insiders, C-level execs. That's your CEO, CFO, COOs, CMOs, CTOs, so many O's, other executives, VPs. We also have board of directors, general counsel, and really anybody those classified as 10% owners, meaning they own at least 10% of the outstanding stock. And when they make a transaction, these corporate insiders are required to report their trades within 2 business days of their stock transactions. Okay. Why follow them? Well, we've already kind of front run this, right? Why do we follow insiders? Seems like a very easy, obvious question. Well, they have access to confidential, non-public information. They're involved in day-to-day operations and key decision making. They're privy to company financials, strategic plans, and they have just kind of general overall insight, right? And by having this information that you and I don't, Johnny, Susie, Ricky, Bobby, Trader, we're not privy to a lot of this. But insiders can be very smart buyers. Okay, from late March here all the way through April, we see the president, CEO, senior VP, 10% owner of a limited partnership, all buying at multiple points. If they're coming in and buying at these points, they probably know something, right? Probably know something. Here in Paladine, there was no insider buying since 2023, and all of a sudden, you have a president, CEO, director, CTO, all buying. I mean, did they just walk out of the same board meeting with the same information? I don't know, but probably appears so. They probably know something that we don't. And then we have corporate insiders selling for a variety of reasons. Let me point this out. It's very important. Insider selling is not to be treated the same as insider buying. It doesn't necessarily signal negative or company news. Okay, it could be in the form of a stock option exercise, exiting a lockup period, and can also be due to personal financial planning. Portfolio diversification, tax liquidity needs. Maybe little Billy needs a new Porsche before he heads off to college. I mean, there's all kinds of reasons insiders sell. Okay, but there are times when corporate insiders can be smart sellers too. Insiders selling can be something worth watching and paying attention to. And this is when we like to turn our focus on what we call cluster selling. So here we see both the president and CFO offloading thousands of shares, and the stock drops 65%. Kind of makes you go, So how do we track this information? How do we track it so we can try and profit from it? I mean, that's what we're doing, right? That's the reason that we allocate capital. We want to try and profit off some of these moves. And so what we do, or how we can do this, is through a government website. Who enjoys going to a website ending in .gov?
There's nothing I love more than working through government websites, Silas. It is just a joy.
I mean, I want to get a butter knife and a bottle of scotch, and it's just and peel my eyes out. It's terrible, right? And so insider buying and selling must be reported to the SEC within 2 business days of the transaction. And these are through forms called 3, 4, and 5. 3, 4, and 5. We typically focus on the form 4, and that covers the majority of insider buying and selling, and then are posted to the SEC's online EDGAR database for public viewing. So this is an example here, and you can see the name, you can see the company, you can see the role of that person, i.e. CEO, CFO, the date, and the share price, which you see the share price, and then ultimately the dollar amount as well. Okay, and I don't know anybody who would find this fun scouring through this. You have the ability to do it if that's something that you want to do, but this is essentially how you can do it. And in fact,
and Silas, I'm assuming I've only looked at these a couple times in my entire life, to be perfectly honest. Because once someone showed me how to do it, I did it about one time and thought, well, I never want to do this again. But I'm assuming with the thousands of ones that get on there, most of them are nothing burgers, right? They're just someone, a couple $1,000 that mean absolutely nothing to you but you kind of have to scour to find out which ones actually do matter.
Yeah. I mean, to my knowledge, you can go to the SEC.gov/EDGAR site and type in, tickers and search through all, but I don't think there's a way that you can just do a sort function, looking for the largest buys and sells and what is of significance. And so, somebody says like going to the DMV. I mean, again, not fun. So yeah, you can you might go there and type in, whatever ticker you want and see somebody purchase, $1,000 worth or $500 worth. That's not something that we typically want to look at. So that's how you do it. And I can share that link with you if anybody wants it. Actually, I'll just do it just in case. It's sec.gov/Edgar/search. If somebody can put that in there, and I'll just say good luck with you, and make sure to send me whatever nuggets you find. Okay, so let's move to Key Insider 2. Okay, let's move to 2 because again, what we're trying to compile here is that theme that we're following called information advantage. Information advantage that gives us an edge. And so, does anybody want to take a guess at the Key Insider number 2? I think maybe the backdrop here might give it away here. And William, we're going to answer that question here momentarily. And here you go. Political insiders, the Washington elite. So members of Congress can trade individual stocks, options, and believe me, they often do. Okay, they often do, and they beat a lot of hedge fund managers. So there are limitations, though. Political insider trading is using non-public privileged information for personal financial gain. And so this occurs when politicians with access to confidential or sensitive information related to government policies, regulations, decisions, use that information to make trades or investments before the information becomes knowledge. And so this is an unfair advantage, but it allows them to profit at the expense of other investors who don't have access to such information like you do. And it happens over and over again. So why is this important? We talked about why you might be interested in following C-level execs. Well, why would you want to follow political insiders? Well, you saw some of the stats earlier, but members of Congress sit on very, very important committees and play a crucial role in the overall legislative process. So you think about this, they're sitting on House committees. Okay, no surprise that these conflicts here do not stop members from trading stocks that sit on House committees. The House Oversight Committee, these are where recent transactions, just shy of $10 million, 435 transactions here, an average of $23,000. The House Armed Forces Committee, $8.5 million worth of transactions, almost 400 transactions total. Here in the House Oversight Committee, 328 transactions, around $6.5 million. Homeland Security, $11.5 million, 272 transactions.
Oh my gosh.
Purchasing technology stocks. Okay. House of Foreign Affairs Committee, $11.1 million in technology stock transactions. I mean, what are they doing? Are they writing bills? Or are they sitting there on their Robinhood app trading? Senate committees, no different. Here we have huge transactional volume, guys. Huge transactional volume. 2.5 million, 2 million on multiple committees, technology, financials. You look at these numbers here, House of Representatives, we have a lot of activity by this group, particularly in the healthcare and tech sectors. This guy, Rep. Ro Khanna, here has disclosed his family purchasing 1,600 separate transactions across healthcare, financials, tech, cyclical, sits on the House Armed Services and Oversight Committee. He is one of Congress's top traders. Get this. You guys are going to, hopefully you're sitting down. He placed over $100 million in transactional volume. $100 million.
Sounds legit to me, Silas.
And this is not just a one-off, right? This is not a one-off. Michael McCall, I think this guy's out of Texas, 142 transactions in tech stocks. This guy wrote the TikTok ban bill, okay? His salary is $174,000. March 3rd, he authored the TikTok ban bill. He invested 150 grand in Meta. Then he invested another 150 grand in Meta. He had invested $350,000 in Meta, another $350,000 in Meta. And so after 3 weeks after writing the TikTok ban bill, the man invested about $1.15 million. And then what did he do? He saw the TikTok ban bill was going to be included with all the Ukraine funding. And a week later, of course, he voted on the bill he wrote. Span of 40 days, the dude who wrote the TikTok ban bill invested this much money in Meta. I mean, this is some serious conviction. Rep Josh Gottheimer, this guy sits on the House Financial Services Committee. He had perfectly timed stock trades in this very obscure Dutch financial services company. Sits on the House Financial Services Company. Well, in July, he sold this payment company, ADYEY. A month later, the company announced its slowest revenue growth on record, falls 50%. Falls 50% where he sold, and then he comes back in and bought on August 21st, and stock rose 40%.
Wow.
Heck of a trader. Heck of a trader. And does it take place with the U.S. Senate? Of course. This guy, I can't stand looking at this guy. One of the most active members in Congress, hails from my home state. He purchases technology stocks and totaling $1.5 million, 1.3 in the financial services. And here he decides to buy some put options. Put options, $50,000 worth of put options in Tesla ahead of bearish Q3 results. Serves on the Armed Service Committee, purchases 3 separate purchases in a stock called Humacyte, a small biotech company that shared the success of their new medical tech, helping treat Ukrainian soldiers' combat wounds. Okay, must be an expert in this small North Carolina-based pharmaceutical stock. He purchased between $50,000 and $100,000. And then the stock conveniently rallies 120%. Okay, so we'll look at a couple more examples here. Making this guy, Mark Wayne Mullen, a small water meter company called Badger Meter. Who the hell's trading Badger Meter?
Yeah, exactly.
In 5 and 6 figure size. 5 and 6 figure size. Well, Mark Wayne Mullen is. Okay, water meter company. The EPA, after his purchase, the EPA passed a mandatory requirement for utilities, which sent the stock soaring. Amazing stock picking. So how do we track this? Okay, it's important so you guys know how to track this. Don't expect it to be anything fancy. Expect what you would expect, a good old-fashioned government report. This is called the PTR report, okay, periodic transaction. Politicians have up to 45 days to disclose transactions that exceed $1,000, and that's this through this report. So, how many days do corporate insiders have? 2 days. Well, guess how many days the guys that write the bills have? They have 45 days to disclose. 45 days, and get this: there are cases where transactions are filed years later. And what happens if they're past the 45-day window? Again, sit down for this one. If they fail to disclose and it goes 45 days past, they get fined $250.
Huh.
$250.
Wait, you mean they get banned from Congress?
No, they get fined $250. So, do you think they're in a huge rush to go disclose these transactions?
That is
so
wild.
We'll go back to the PTR report. You see investments or stocks purchased. You see the stock name here. You can see here in the middle the date of the transaction, and then you have the amount, which also is not precise. It's in this this range here, so you don't get a true range, not a specific dollar amount, but these are the ranges, and this is the summary of the transactional volume they reported. Now, if I knew, if I go back to when I was a youngster, I would have my goal when you say, what do you want to be when you grow up? I would have said, hey, put me in politics, put me in Congress. I mean, you guys are making out like bandits. Another example of the PTR, Gottheimer again, Josh Gottheimer. He was calling, to crush terrorists as he bought a leading weapons manufacturer in Northrop Grumman, a $50,000 investment there. Tommy Tuberville again, buying about $15,000 worth of call options in U.S. Steel. A couple of months later, U.S. Steel announced that's being acquired, and the calls shoot up 170%. So this is what we call the information advantage or the edge. And so that leads us into the key insider group number 3. Anybody want to take a guess here? This is kind of a more secretive, elusive group of insiders. Let me ask you this while I see in the chat here, who do you think the third insider group is? So if you think that the Washington insider, does everybody think that the Washington insiders are in control? Let me ask that. The writing bills, passing legislation. Who's exerting their influence on Washington? Who is pushing large sums to PACs, lobbyists, funneling millions of dollars in campaign fundraisers and donations? A couple of you guys in here. I don't know if the chat is open to everybody, but somebody already hit the nail on the head. And it's what we call hedge fund insiders, Wall Street hedge funds. All right. And so we have what we call these titans. You've heard a lot of familiar names: George Soros, Paul Tudor Jones, Stanley Druckenmiller, Jim Simons, Ken Griffin. I love studying these guys. I love studying these guys. And, what is a hedge fund? What is a hedge fund here? Well, we know they're a class of investment funds that pool assets together, utilize advanced strategies and techniques, typically only available to accredited investors, and they most certainly influence company policy, leadership, and direction. Okay. And so on this last point here, this is one of the primary reasons we take a look. When hedge funds go in, they're typically committing very, very large amounts of capital, which means they have a conviction. And just like, a C-level exec, they're buying because of one reason. But these commitments of capital can also get them on the board of directors or a seat at the table, right? Where they can influence direction even more. Bottom line is they care about one thing and one thing only, and that is profits. These guys, they're speculators. These guys will go to great lengths to ensure that happens. In fact, so much that it often cycles back to the politicians over and over again. And this is what we call kind of the 1% wealth cycle machine. So you got Steve Schwarzman, CEO of the world's largest alternative asset managers, managing over $1 trillion. That's with a T. T is in Tommy. Has donated over $20 million to various campaigns. Billionaire Paul Singer, who manages $21 billion hedge fund Elliott Management. He and his firm come in around the 13th largest donor, I think, in the last election cycle. Billionaire Jeffrey Yass from Susquehanna Group, private equity firm, trading outfit, Pennsylvania's richest person, donated over $18 million to various PACs and lobbying groups. Okay. Ken Griffin, we know him, head of Citadel. His contributions to PACs totaling $3.8 million. Contributions to general PACs total over $131 million.
Oh my gosh.
Now, do you think you think he does this because he's just some kind soul and wants to spread the political love? Or do you think he just loves democracy and wants to support politics? Or do you really think that there's an agenda? The guy runs a hedge fund, for crying out loud. He's expecting an ROI on that $130 million dispersed through dozens of PACs and campaign contributions. Let's not be naive here. He's exerting political power and influence through these massive contributions. Clear and obvious agendas, and another example of why we pay attention. So you break that down, the total to candidates, and super PACs, 400, 500 million respectively. The total from Wall Street, $225 million. So the fact that Wall Street's deep pockets may have influence is a gross understatement. And this all fuels the 1% wealth cycle. We call it the 1% wealth cycle. And it's not stopping anytime soon. So, you see this thing over and over again. You can watch from the sidelines, be pissed off, or you can, piggyback off of it. I prefer to piggyback off of it and ride their coattails. I don't really care why somebody's buying XYZ with $2 million. All right. So you've got Wall Street writing fat checks to PACs, which funnel to the politicians who are writing and passing the bills that benefit certain companies, sectors, and industries, which benefit the corporate executives, with whom the politicians and Wall Street gurus have already invested in because of the insider information that will, of course, benefit the companies and lead to higher prices. And then the cycle starts back over and repeats. So hopefully I've done a job. My job here is why we track these insiders. Does it make sense? Thanks, Mega. We're following the smart money. A lot of my life's work has been trying to understand how these insiders work, but more importantly, how we can efficiently track, follow, and profit off the same information. And we get real excited. We get real excited when we see multiple cluster buying across the three. When you've got C-level cluster buying like a CEO, CFO, VP, or executive, whether it's a political insider, whether it's a Wall Street hedge fund, and then when you have all three, okay? You saw this during a very important time in history, COVID pandemic. Everybody remembers this. Mm-hmm. Intelligence Chair Richard Burr, whose committee is receiving daily coronavirus briefings, dumping $1.7 million worth of stock around daily briefings of a potential global health threat. 33 transactions, guys. Notably, over 150,000 in Wyndham hotels and resorts, which subsequently lost 63% of value in a matter of weeks. Senator Kelly Loeffler from Georgia, who sits on the health committee, started selling stocks in January 24th. The same day the committee held a private all-member session on COVID-19. She sells up to $18.7 million of Intercontinental Exchange. Get this. Her husband is chairman of the Intercontinental Exchange and the New York Stock Exchange. Wow. Pretty damn interesting timing, right? And then you got DuPont. You got Senator David Perdue starts buying around $185,000 of DuPont stock, which makes personal protective equipment. The same day we had the Senate briefing on the coronavirus. You also have hedge funds like Maverick Capital, GMO Partners, Hillman Capital Management, GAMCO, disclosing millions of dollars worth of share purchase. Right there at the bottom, at the start of the pandemic, DuPont rallies 140%. Here, we spot politicians, directors, hedge fund insiders like Jim Simons, Ray Dalio, Paul Tudor Jones, even Warren Buffett coming in, buying millions and millions of dollars worth of Pfizer, Johnson & Johnson, Moderna, 3M, Quest Diagnostics, a leading COVID-19 provider. Remember, these companies spent substantial sums, millions of dollars, lobbying the federal government back in 2020, okay? Another case study, guys, and then we'll kind of wrap this up. I just get so passionate about this.
It's unbelievable. I mean, hopefully people are starting to see, Silas, why I wanted you to come on and do this. It's one thing for me to give a theoretical overview of insiders and kind of explain to folks, hey, this is kind of what happens on. It's another thing to have an absolute expert who has done this at every level and understands this inside and out. So hopefully you guys are getting a ton of value. We will transition here. Okay, the big question, how do we take advantage? Yes, we'll answer that part too, but I just wanted him to lay out, as you can see, he understands this stuff soup to nuts and has spent decades dialing this in. And so I just wanted him to kind of lay it all out for you first, and then we can answer the question. Okay, now how do we take advantage? If they know this, how do we actually, piggyback, ride the wave, whatever you want to call it? Don't worry, we'll answer that question too. He's just going to kind of, finish line the framework here first.
Yeah. I mean, I think that's super important. So you know exactly how we're going to transition into how you can, capitalize on this potentially. But we'll just kind of end with one more case study. You've got multiple politicians here. They're all buying Raytheon, Lockheed Martin, Boeing back in this was September, October of last year. And not only did you have a basket of politicians buying, but you also saw corporate insiders and hedge fund gurus buying as well. Okay. So, I mean, you've got politicians, you got C-level execs, and you've got hedge fund gurus also buying the stock at the same darn time. You've got RTX rallying 50%. You've got Boeing rallying 48%. All of these defense stocks going straight up. Okay. So I think by now, hopefully you understand why we track these insiders. Simply because they possess information we do not have, insider information. And we want to ride their coattails, simple as that. And so that's why I'm really, really excited to share with you something that we've been building for a long time that is just absolutely crushing the markets. But before we go, I'm going to give you a few tips here that you guys might want to take a screenshot or something. This is what we look for right here. These 5 things is we want to focus on purchases more than sales. We like to look for trades from top level insiders. Okay. We want to pay special attention to the larger transactions. We want to focus on cluster buying. So cluster buying is when we have the multiple insiders buying, or it could be part of the other 2 groups. And then we like to, this is not necessary in all cases, but the buying and selling in the small cap stocks is really where you get a lot of bang for your buck, because they're kind of under the radar, and they can really, really pop hard once they get some legs behind it. So that's kind of just the overview. Nathan asked me to come in and say, why don't you just give a little bit of color commentary on what the heck all this is about and why it's important. And hopefully I did a decent job laying that out for you. You can get a lot more technical if you want to, but why? Like you don't need to go scour the .gov websites. The information is right there in front of us. And that's what we're going to talk about here momentarily.
Yeah, well, I think you did a phenomenal job, Silas. I mean, this is awesome. Obviously, like I said, I could probably give people a general overview of what's going on here, but this is, you are so deep into this and understand it A to Z. So now the question is, okay, how do we take advantage of it? Because you guys just saw all the stuff that goes into it. And so the real reason that I'm, giving away my session on opening playbook here to Silas is not just because I thought he would give a great training, which he did, and hopefully you guys enjoyed that and maybe it ticked you off a little bit, but still gave you some good insight. But if all Silas was a researcher and just made you angry, I wouldn't have him on today. He has also built a tool that helps us actually take advantage of this, and that's the hard part, obviously. But Silas, I mean, I think I told you this, guys, a couple times. Graham and I had that call with him, and within 5 minutes we said, okay, we need to get this, on board, because we've seen other insider stuff. We've seen, different ways to track it, services, all that sort of stuff, but nothing that I've seen does anything like what Silas's tool does. And so that's the how. Like I said, I don't give away this session lightly. I would only do it if I thought Silas had really solutioned something that's meaningful and makes an impact and can be a massive advantage to your trading. So I take this very seriously when we bring someone on like this. And so I encourage you guys. I know we've been an hour already, but stay tuned for a little bit here, because I think you'll be blown away. If you were already blown away by the information, I think you'll be really blown away by the solution, because it is enterprise level, it is intuitive, it is actionable, and I think it's one of the most unique ways to actually get a real solid bias, and especially for you guys who are interested in doing some stuff maybe off the beaten path that we don't do all the time, like finding some of those small cap stocks and getting some asymmetric opportunities. I'm probably never going to find you a small cap stock with an asymmetric opportunity, but Silas will. And so if you guys are able to hang tight, Silas, are you able to just jump right in and kind of show us now? You've laid out the scenario. How do we take full advantage here?
Yeah, absolutely. And thank you for the helping with the transition there. Let me see if I can.
I think of this, you hear the common phrase or the cliche, whatever, don't get mad, get even. The dashboard's how you get even.
Yeah, there you go. There you go.
Right on, right on. Can you guys see my mug?
Yep.
Okay.
Yep.
All right.
Looking good.
All right. So you want me to go ahead and just kind of take it from here?
Yeah, Silas, if you don't mind, I'd say just rip right through it, man, and let's give people an opportunity to actually put an exclamation point on what you just went through. Yeah,
awesome. So again, thanks guys for sticking around, and I absolutely love this stuff. I say that every time that I get an opportunity to speak, and I appreciate it. Everybody sticking around. We're gonna answer all of your questions, so feel free to ask them or maybe take some notes, and then in the end we'll stick around and we'll answer all the questions that you have until they're all answered. Okay, so we want to make sure you understand what we're presenting here, and again, just to kind of reiterate that there is a risk of losses with trading. But what we do here is we develop tools and strategies to the best of our ability. Nobody can guarantee the future. Okay, we don't have Biff's almanac from Back to the Future. There is a risk of loss when trading. Past performance is not indicative of future results. And what you're going to see here are historical examples on signals that our insider dashboard picked up, and these were published in real time. And the gains are based on the underlying stock unless otherwise stated. Okay, and there's no exit alerts. These are examples of based on the peak market trading price as of 9/19. Okay, so there are huge winners, there are smaller winners, and there's always going to be losers. Okay, and this is a tool for traders, not a trading service. I'm not your personal financial advisor. You ultimately are responsible for how you use this information. Okay, this is for education only. You got to trade at your own risk, and I think everybody knows that. But just have to cover this. There's going to be losers. There's no black box miracle system that prints out winning trades automatically. This is research. This is education, and we use all this to give us an edge in the markets. And if you can't handle a losing trade, I don't really mean to be mean, but this is probably not the place for you. Probably shouldn't consider being in the market. So losses in trading have occurred, and they will certainly occur in the future. That is what I can guarantee. So if you didn't know who the heck's talking to you right now, my name is Silas Peters. Today I want to share with you a very, very powerful trading tool, insider trading tool, that I personally think could change the way you look at stocks forever. And not only does it help us piggyback off the trades of corporate insiders, from CEOs and CFOs to presidents, VPs, even board members, but it's a brand new way to what we call front run what could be potentially market moving news. And this is all done before it's picked up by the mainstream media. So like this on Thursday, May 29th, it flagged insider activity on a stock called Core Scientific. The ticker is CORZ. 27 days later, news dropped that the company was being acquired by CoreWeave for $9 billion. $9 billion, and the underlying stock soared 74%. Or when the dashboard spotted insider activity on Astera Labs. ALAB is your ticker. 14 days later, the company announced 238% year-over-year revenue growth, 72% gain on the underlying. Or when it flagged insider activity on TeraWulf, WULF. Wolf is the ticker. A few weeks later, Wolf announced a $3.7 billion AI infrastructure partnership with Google. Led to 148% gain on the underlying. And it's all thanks to this brand new, never